JP Morgan, which has announced that it will include India in its emerging markets debt index from June of 2024. The move has significant implication on Indian economy and global investors. It paves way for inflows worth billions of dollars into world's fifth largest economy. How will it happen? Why is it such a big deal? Suyash.
Shweta, it's a very big positive for the Indian markets because India was the last big emerging market to be outside the global bond indices, and JP Morgan is the first to add Indian sovereign bonds to its emerging market indices. Now the inclusion...
Now 22 bonds have been identified, I'm given to understand. So not all of them will be included?
Yes. So currently 23 Indian government bonds have been identified with a combined nominal value of about $330 billion. Now these will be eligible for inclusion in the index. Now
all 23?
Now that the details of that we'll have to see. These 23 bonds currently they qualify for...
Okay, they qualify.
So now the inclusion will begin in a staggered manner over a period of 10 months starting from June 28, 2024 through 31st March 2025 with an inclusion of 1% weight per month for a maximum weightage of about 10%. Now considering that the AUM of funds that track the JP Morgan Emerging Market Index is roughly about 236 billion, India's inclusion could result in a passive inflow of about 20 to 30 billion dollars in the Indian bond market. Now Ambareesh, this is definitely a very big news for the Indian bond market, but the big question that comes to my mind is that why did it take till 2023 for a major index provider to include Indian bonds to its indices?
I mean, they may have been worried about the currency. They may have been worried about the sort of liquidity which is, available in this market, and possibly there could have been, some issues on the tax front. Although the government has confirmed that, they are not giving any SOPs for these investments. But whatever said and done, I think, better late than never. I think this is a very positive sort of a development for India. Because like you rightly said, it will result at least, because of this, there can be a close to $24 billion inflows, over the next 12 months. And this will clearly help as far as the rupee is concerned in shoring up the rupee. At the same time, we could also see the yields, coming down to a certain extent.
Now, Mr. Baliga, can more global index providers follow, on the lines of JP Morgan? And if so, what sort of additional inflows can we expect?
Additional inflows are difficult to say, but yes, like I said, this is just the beginning. And you'll have more such indices, including India, in them. So I think this is just the beginning. And going ahead, we could really have much more flows. I think it can be multiple of what we're talking about right now. But for me, it's a bit difficult to put a figure on that.
Now, will it have some implication on the rupee? Now, I was reading that analysts were saying it will provide some stability to the rupee, which has fallen to record low levels. What's your view, sir?
Absolutely. That's what I said in the beginning, that this will clearly help shore up the rupee. Because typically whatever comes into bonds is more of a longer term sort of investment, and the money stays back for a much longer time. So I think clearly it will have a positive impact on the rupee. And if you're talking of much longer term, I think I'll not be surprised if we see the rupee actually appreciating than depreciating much more from here.
And so what will be the implication for equities? Now, a few analysts are saying that it will be a major positive for the PSU banks. How will it be a positive for PSU banks, sir?
Going ahead, because of, as of now, this is only limited to the government bonds. But going ahead, when you have more such indices, allowing investment into the Indian bond market, I think that will next expand to the debt paper being issued by the banks. I think from that point of view, it should be positive for the banks in the longer term. But right now, I don't think it will have any sort of immediate effect. But I think it's more sentimental, because of which we saw the PSU banks moving up.
Now, sir, there are also some reports that that are saying that high foreign holdings of debt might expose India to external shocks, adding that large inflows and outflows linked to development in global markets can have an outsized impact on domestic bonds and currency markets. How do you see it, sir?
No, see, I mean, when we are on the way clearly to become the third largest economy, I mean, I think we will be in a position to absorb those shocks. And again, I mean, we are talking of such large inflows, possibly in the next 5, 7 years. It's not going to happen in the next 2 years. So by then, our economy will be decently resilient to in fact absorb such shocks. So I don't see that as a big issue. But yes, that's a threat, no doubt. I mean, that's a threat for any large economy where I mean you have a lot of foreign money flowing in. So that clearly is a threat which is always there. It's a question of as to how do you absorb it. And I don't think that will be a major issue once we become that large an economy.
All right, Mr. Baliga, thank you so much, sir, for taking time out. Thank you for speaking to Newsline. Suyash, to you as well. Thank you for joining in with your inputs this afternoon.